Okay, so with that being said, um, I'm going to go into what we have for today, as well as I would briefly be looking into market projections, what I'm looking at in the market on the bigger scale in the coming weeks or months, if possible, as well as how I'll be approaching this, how are we looking to trade these market expectations. So with that being said, first things first, this is my Bitcoin chart. As most of you already know, I basically just trade um, Bitcoin as my most dominant pair, while I have gold and euro Australian dollar on the watch in case maybe I just get too bored with Bitcoin. So I'm just going to switch this to the daily charts. Before we start looking at where we are possibly heading to with Bitcoin in the coming days or coming weeks, I would like us to have a clear background, of where we are coming from, both on the weekly and daily time frame. Yeah, and one of the most important factor, um, I don't know of for others, but for me, one of the most important things I look at, in fact, the first thing I always look at when I pull up a chart like this, I always want to first look at market structure, very importantly. Now, irrespective of what system you trade, irrespective of your approach to viewing the market or whatever it is you want to call it, I think market structure is something that would always come in handy. Whether you trade an institutional concept, a retail concept, you just trade market structure, you trade Elliott wave, SMC, supply and demand, HPB, whatever it is you trade, market structure, a sound knowledge of the market structure kinds of just gives you an edge. It kinds of gives you an edge. It gives you an understanding of what is going on in the market. I think for most traders, there's always this misconception of always trying to predict what the market is going to do next. And I think that is where a lot of people fail. Um, you can never, no one can actually correctly predict the market. The best we can do as traders, especially as retail traders, the best we can do is basically to observe the market and then follow its footprint. That's literally the best any of us can do as retail traders. We don't control the market, we don't have the resources to move the market. We literally don't have what it takes to dictate the tone of the market. So if you're playing a game where um, quite a couple of odds are against you, I think it is best for you to just stick to what is to some extent in your favor and then develop that. So I'm going to start off by first analyzing Bitcoin market structure as we've seen it, I think, from December. This should be somewhere in December. Yeah, I remember taking a long on the 22nd of December, if I'm not mistaken. That should be somewhere around here. And then riding that up until 23K or so before getting out. So on the daily chart, if you look at Bitcoin, I think there are two basic features that characterize every trending market. And for every traders, what we always want to look at is to catch a trend. Well, I can't speak for the majority of traders, but for myself, what I always want to do when I look at the market is get in on a trend. And in 90% of the case, regardless of what the time frame is, I'm not looking at getting in on a trend. Probably, let's look at this. This is an uptrend, um, like this. I'm usually not looking at getting in on a trend, let's say buying here or buying here or buying here. Usually, when I look at my chart and then I see market building towards a particular trend, building towards a particular pattern, what I always want to first look out for is the strength of that trend. the strength of that trend, after which I try to look out for weaknesses, if any. So, like I said, on the daily charts, if you look at Bitcoin from December of last year, you would notice that the market have kind of been on some sort of like a it has been on an on although if you look at the much bigger, let's say weekly, monthly time frame, arguably we are not in an uptrend. But if you look at this from the daily time frame, from let's say December up until today, we are very much in an uptrend. And okay, let me just move this aside. Now, one thing I didn't learn this from studying any concepts. I didn't learn this from going through any PDF or trading video. This is basically something. This is a theory that I kind of just make myself from looking at the market. Now, if you look at every LD trend, let's say an uptrend, for example. Now, every trend is characterized by phases. Yeah, strong impulse correction. Let's say phase one. We're coming from a previous downtrend. From this point, a break of structure, change of character right here, and then the beginning of an uptrend, the phase one, the continuation of that trend, phase two, and then most importantly for me, swing failure or trend failure, whichever way you want to call it. Swing failure, this right here, that point where you stop having higher higher highs in an uptrend and start seeing possible build-ups for a higher low. Yeah. So in an uptrend, we look out for higher lows and higher highs, and then higher highs and higher lows and all of that. But at what point do you begin to start looking towards a possible lower low instead of a higher low or a higher high in an uptrend? And for me, it is exactly right where we have this swing failure. So what is very important for me is swing failure and weakness of this trend. Not exactly the strength of the trend, because I'm basically not looking towards getting into this trend once the train has already left the station. Let me use that for an example. I don't want to trade I don't want to be feeling buys when the trend is already halfway through. It kind of pops up this psychological effect. At that point in time, I feel like you are operating from more of an emotional standpoint than from a rational, logical thinking point of view. And we might we might try to make ourselves believe as much as we can, but trading, to be able to trade successfully, you need to first find that space up within your head where you are in some sort of balance. If you are not mentally balanced, if you're not psychologically balanced, if you're not, technical skills is one thing, but with all the technical skills and you are operating from a discomfort zone, mentally or psychologically, you can not consistently maintain a certain level of profitability. So for me, I figured out that my comfort zone is actually being able to catch a swing failure and the beginning of a trend. And now the sweet thing with swing failures is, if you, like I said, this is not a theory I kind of got from a textbook or a trading PDF or whatever it is you want to call it. This is just me looking at the market over and over and over and over again. Yeah. So now this is the sweet thing I like to look at when I monitor swing failures. It's usually the fact that swing failures usually mark the beginning of a trend, of a new trend or of a reversal trend. So we are in an uptrend prior to this point where we had this break of structure that marked that serves as a change of character. If you don't know the relationship between a break of structure and a change of character, I'm going to recommend that you go to my YouTube channel. I think you are most definitely going to find a video on that on YouTube. Apart from going to my YouTube channel, just go to YouTube and search change of character, break of structure, and then you are going to find lots of videos on these concepts. But in trading, there's no standard definition, no standard explanation for any concept. It basically works how it appeals to a particular trader. Yeah. So I always want to look out for this swing failure, be it in an uptrend, in a downtrend, or in whichever market cycle. I always just want to look out for swing failures. So I would go to the Bitcoin chart and try to explain to a very logical extent what I mean by that. Now, this is the daily charts. Let me close this so we can get a bigger view. Now, I'm going to start looking at this chart from, this is June of last year. We had higher lows and higher highs, and higher lows and higher high all to this point, and then we started seeing signs of downtrend, change of character. Well, not in all cases you find these swing failures though. Most times it's usually just the change of character and then a retest to that flip zone. But for me, I love to trade not just the change of character. My emphasis is always on swing failures, change of character. I love to see those two working together to give me a better idea of what is going on in the market. So here we have, still on the daily chart, we have our lower highs and our lower low and our lower high. And then notice how before we started seeing signs of this uptrend that started in December, we first had two things happen in this market. We first had a lower low, which is a sign of this downtrend, which is I think, do I call it a characteristics or what? But a lower low is basically a sign of a downtrend. And then instead of coming all the way down here to form some sort of like a lower low below this previous low, we saw that prices failed to create a new low. This is the swing failure I was pointing out at earlier. Prices failed to create a new low and then went back up to break above the previous swing high. So first we had a swing failure and then we had a change of character. And if you've been following, let me say, my videos for a while, you would notice that I always emphasize on the fact that market turns inside out. So before we had this change of character play out on the daily time frame, I think I had seen it happening on, let me come to the 1 hour chart if we're going to get something here. Yeah. I think, yeah, on the 1 hour chart, we had similar swing failure, and then I think I filled in somewhere around here. Lower low, no, this is lower low, lower high, and then higher low. In a downtrend, we are supposed to be seeing lower highs and lower lows, while in an uptrend we're supposed to be seeing higher highs and higher lows. Now we had, even on the 1 hour chart, we had a new low, yeah, a lower high, and we just kept on on 15 minutes right here, we kept on printing lower highs and lower lows and lower highs and lower lows until there was this swing failure. Now, originally, I've been looking at this chart. I've been following it for quite a very long time before December. I've been expecting this swing failure. So what I started doing immediately, I noticed the swing failure on the 15 minutes to 1 hour chart is I started looking for opportunities. I started looking for demands to fill buys. I started looking for demand to fill buys, and immediately we had the change of character on the 1 hour on this point. I kind of just had this mentality that, well, if it happens on the 1 hour, it has to happen on the 4 hours and daily, which is up here. Yeah. So I got my confirmation right here, right above this level right here. But my target was up until I think somewhere around here. Yeah, somewhere above 20K or thereabouts. I got out, which was in this January. And then now this is where my interest kinds of is. Yeah, this is exactly where my interest is. If we are to look at what is building up on Bitcoin as of right now, yeah, I can go back on the daily time frame, backtest this not once, not twice, not three times. This is an entire concept of trading that I am literally just trying to simplify. It is a concept of specifically targeting weakness of a trend. This is an uptrend. This is an uptrend. We've had great impulsive run-ups right here. We've had quite decent corrections. We've seen quite decent run-up up here. And we could most likely still get maybe a continuation up until somewhere around here or whichever way. But for me, when I identify trends like this, I usually don't want to start looking for this is a daily trend, so I'm just going to limit that to the daily time frame. I don't want to be looking for daily buying opportunities in this trend. This trend is already far gone. Let's say I was on vacation from December up until today, and then I just wake up to this trend. I am definitely not going to be looking for opportunities to buy, especially on the daily time frame. Yeah, the daily time frame is what we are looking at right now. On, let's say, weekly, monthly, let's say on 15 minutes, 30 minutes, 1 hour, on much smaller time frame, I might be looking for swing failures. I might be looking for signs of weaknesses to kind of trade zone for zone. That doesn't change anything about my overall daily bias. On the lower time frame, I can be looking for these zones to trade on the 15 minutes, on the 30 minutes, on the 1 hour, or even 5 minutes. I don't do much of 5 minute charts, but even on the 5 minute, but on the daily time frame, I'm never going to be looking for buying opportunities in this chart. The reason is simple. The reason is because one, I think we've seen quite a significant amount of this uptrend. As of just a few days ago, I think I got in a short somewhere, and if I take this back to the 1 hour or 30 minute chart, you are still going to find exactly this swing failures from right within here. The first thing you just need to identify is identify a change of character. Once you identify a change of character, you can start, well, that is quite a very large concept on its own. But first, always identify the change of character, because that is where every trend starts from, the change of character. So this is the change of character for Bitcoin on the daily charts. Right along this point, in my opinion, I feel like any moment from now, if I'm going to split this uptrend into phases, into market phases based off on the theory I explained earlier, we have the first phase being swing failure, change of character, and then the second phase being a continuation of the trend, and then the third phase being maybe a further continuation, after which I want to start looking out for swing failures. I want to start looking out for weaknesses. Now, in my own opinion, we've gone past phase one, phase two, and maybe phase three on this chart. We are somewhere between phase three, a further continuation, which I think is exactly what we are seeing right here. And then we are looking towards phase four, which is firstly signs of weakness. Although you are most likely going to see these weaknesses on the smaller time frame, it would usually start building up on much smaller time frames. And then secondly, I want to be looking out for that swing failure. That is where I actually want to get my sell orders filled. Now, I would also go to the weekly charts. Let me quickly point out something on the weekly charts. Now, if you look at the weekly charts, I'm not going to look at it from this point, from where we had our previous all-time high. I would look at it from, let's say, from this point down to this point, and then to this point down here. Now, on the overall weekly trend, I think all of this is still it still looks like a downtrend to me. Yeah, we need to see clearly, we need to see new highs, and then we need to see higher lows for this to be um for this to be an uptrend. Now, if you ask me, judging by the theory that I have pointed out earlier, not too long ago. Now, if we look at this to be a downtrend, and then you ask me what is my weekly bias, I'll tell you I'm looking for weekly buys from maybe somewhere along these levels. Yeah, somewhere between, let's say, 16 to 19k, below 19k, let's say 16 to 19k or thereabouts. I would be looking for buying opportunities along those levels on the weekly time frame. Why? Simple. Because we've had a run up of a downtrend, but here is where it becomes interesting. Here is where it becomes interesting for me. Now, if you look from this point where I marked out to be 0.3 down to this point where I marked out to be 0.4, you would begin to notice that the strength of this what do I call it, impulse, the strength of this impulse, this sell-off, doesn't look as strong as what we had here. It doesn't look as strong as what we had here. Basically, what we are seeing, what this impulse right here, instead of taking the form of a quick sell-off, we saw this momentum build downward. And for me, that is my first sign of a weakness. Now, this was exactly what I noticed as of November. I actually started seeing this from, I think, October, November of last year. Okay, even up from September. And I kept an eye on it up until December, where I got that confirmation to get my long. And now it is the same thing happening again on the daily time frame. Now we'll switch. I'll go back to the daily time frame before I. Okay, so on the daily time frame now, this is what I'm expecting to see. Possibly in the coming days or in the coming weeks. I can't tell exactly. For me to take this this huge sell that I am looking towards, by my calculations, we should be looking towards, let's say, somewhere around the 20% sell move to the downside. Yeah, somewhere around that. I'm just giving this is a brief review. I believe that when I get a confirmation for that sell, I would post that in the channel, and then most likely be posting more precise entries and target levels in the signal channel that would be starting up somewhere towards the ending of this month and next month and all of that. But up until then, it doesn't change anything. I'm still going to always update my trades, my setups in the channel. Always. I'm always going to do that. So, okay. So, now in the coming days or maybe weeks, what I would be looking out for from this impulsive leg, I want to start seeing something that looks like signs of weakness. And by signs of weakness, I would maybe want to go to smaller time frame and start seeing this momentum shifts like this. Instead of a quick, a strong impulses to the upside, I would want to see that some sort of like do I call it weak? Yeah, but some sort of like a weak impulse, not as strong as what we have right here or what we have right here or even what we have right here. Yeah, I want to start seeing that weak. I would be looking out for that weak impulsive moves on the daily chart. And then when maybe we have a drop from that shift in momentum, I would be looking for a retest to maybe a supply zone to get my sell, to get my short order filled. Of course, I'm not going to be going in all at once. Once again, I love to see market turns from smaller time frames to bigger time frames. So in as much as this is my daily bias, I want to see it start building up from smaller time frames. That is where I'm going to get my orders filled. I'm not going to get my orders filled on the daily time frame. Nah, I want to start seeing my orders getting filled on smaller time frames. So overall, what I would be looking at is going to look very much like something like, let's say, something like this. Okay, something like this to test our weekly demand levels, which would be somewhere along these levels. Now, on the weekly time frame, on the other hand, on the weekly time frame, the same thing I have pointed out that we've had how do I call it? We've had our shift in momentum. We've had these huge daily run-ups. Now, what I want to be looking out for on the weekly is if this daily bias of a swing failure and then a retest to weekly, will I call it weekly imbalance? Let me just use that phrase instead. Weekly imbalance. Now, I would want to be looking at prices dropping into this imbalance level. We have, for those who are familiar with ICT concepts, we have very strong fair value gap within this candle that is right here. So I want to see at least 30 to 50% of this imbalance may be taken out. Yeah. So overall, I'll be looking out for, and here's the beautiful thing for me, based off my concept, based off my theory, is if we get that playing out, just let me do. I don't like to draw all of this on my chart because I think it is you trying too much to predict the market, and nobody's ever right trying to predict the market for a long term. Now, if we get this happening, let's say by chance or by luck, yeah, I would like to put it that way. Let's say by luck we get our daily swing failure and then prices just come back down to this weekly imbalance right here. I would be looking towards something like this. Whoa. Okay, let's say I'll be looking towards something like this. I'll be looking towards a potential move to as high as 42K. Yeah. Now this is simple. This is simple. You might be asking why. It's simple is because market turns inside out. It turns from smaller time frame to bigger time frame, and then to smaller time frame, and then back to bigger time frame. It's as simple as that. So institutions basically buy to sell, they sell to buy. Everyone trades a financial instrument because you want to make money trading it. And the only way to actually make money from anything is to be buying, and is to buy and then sell at profit, and then possibly look for an opportunity to get back and buy at a cheaper price. So I think if we are going to be seeing a let's say a sell-off on the daily time frame from along this level, then I think we would be looking towards a sell-off that is going to take out um this strong buy side liquidity, this strong buy side imbalance, or whatever it is you want to call it, depending on what concept you trade. Yeah, we would be looking at something that would be pushing us towards a weekly demand zone, or towards a weekly buying opportunities. So guys, that is it for me. That is it for me. That is it for Bitcoin. And I have this. I've been following um my daily Bitcoin charts. Okay, to be more precise, this is similar to what I'll be looking at on the daily. We've had our first phase, second phase, third phase. I want to start seeing weakness, maybe prices shooting slightly above the supply zone up here. This is just some sort of like a rough, I don't know how I'm going to put it, because I'm at as of right now, I'm not exactly working with this. As of right now, I'm not exactly working with this because I need to have an edge, and I'm only going to have an edge when I get build-ups from smaller time frame. So this is more like just a forecast, a projection of what I am most likely looking towards in the market. Now, overall target is going to be somewhere between these two levels. I can't tell where exactly, but somewhere between these two levels for the daily time frame. And if you switch like this, you are going to find the same thing happening over and over again. Phase 1, 2, 3, 4, shift in momentum, break of momentum, retest. This is exactly where I got filled in December, and then we went all the way up. The same thing right here, phase 1, 2, 3, shift in momentum, break in momentum, retest, and then we go all the way back down. So I can just go on and on and on with this. This is basically what I've been trading for quite a while. Yeah, and then on the weekly time frame, I'm looking towards something more of this. This is a weekly demand zone we have right here. We've seen prices reacting to this weekly demand zone. 1, 2, 3. This is a weekly supply where I'm looking towards my overall weekly buyers. If we should come all the way down here, I'm just going to start looking for that shift in momentum down here, and then looking something like this. Yeah, something like this. Now, this is not financial advice. This is just me sharing my ideas and my thoughts of on the market right now. It's nothing different from what you've known before. Yeah, but most importantly, pay attention to market structure. Look for strengths and weaknesses in trends. I am of an opinion that the market never moves without leaving a footprint. Yeah, I am of that opinion. It is a very strong opinion as far as I'm concerned. But I am of the very strong opinion that the market never really moves without first leaving a footprint. I don't care what the fundamentals is saying. Yeah, I really don't care what the fundamentals is saying. One thing I know for a fact is at the end of the day, regardless of what the news is saying, regardless of what the Fed is saying, regardless of what the fundamentals is saying, market is always going to shuffle back into the right technical state. I'm not by any means disregarding fundamental analysis. I am only telling you that literally everything you need to to develop your trading edge can be found on the price chart. Literally everything you need to develop a solid trading edge can be found somewhere in your price chart. So instead of running about stressing yourself over nothing, look at your price chart. You can go back in time, backtest this on any time frame you want. I can go down to as small as 5 minute time frame and then start looking for weaknesses and swing failures and weaknesses and swing failures and weaknesses. It's nice, it's beautiful to maybe just catch a quick pump. Market is going up, you get in at this point and then you get out somewhere around here. But the difference between a gambler and a profitable trader is you execute your trade with some level of precision. That is, to me, that is just the only difference between someone that can be arguably said to be how do I put it? An experienced. I don't even want to use the word experience because you can be an experienced failure. Yeah. So you can be experienced and still not pick out the right lessons. But the difference between an actual trader and a gambler is that you don't chase pumps. You don't chase pumps. You trade quality setups. And quality setups, it doesn't necessarily have to be swing failures like I do, but just identify a clear setup. But start by understanding look at your current market structure, get a picture out of it. The market never moves without leaving a footprint. That's one thing I can always assure you. Never. The market never moves without leaving a footprint, without showing you a sign of what is going to happen next. That is why I don't look at fundamentals before I look at the charts. I look at the chart and then look at fundamentals. I only use that as confluence, not as a basis for my decision. So guys, this is why we call it a day for today. If you've gotten something, let me say, interesting or quite enlightening, feel free to just drop a comment in the group or something. Regardless, it doesn't make much difference though. I think my concern and my interest is in making sure that somehow through this channel you can be able to develop your trading and then become a better trader. Yeah, through my own experience. Experience is the best teacher, but nobody says it ever has to be your own experience. Learn from other people's experience. So guys, with this, enjoy the rest of your day, enjoy the rest of your weekend. See you in the new trading week.